All right, I appreciate it. And yeah, thanks for dialing in, guys. This one's gonna look a lot different than what it did when we did this in person not so long ago, but that gives you an idea of just how quickly these fertilizer markets have changed. A lot of things we were looking for back then actually did play out, but since then, some new things have popped up. So we need to dive into it. One thing I do want to say is that I will be sending this PowerPoint presentation along to be shared with you guys. There are going to be some slides that have a lot of data on it that we don't have time to dig into. We don't have that kind of time, but I want you to have access to it so you have an idea of where this stuff comes from around the world, where, why something in Russia might matter for here, and different things like that. And the other thing I want to start with is that please remember, I want to be upfront. I don't have a long or short paper position. I do not have a long or short physical position. I won't allow myself to trade fertilizer stock. I do not have a dog in this hunt. And a lot of times people are like, well, how do you talk about this? No, you're supporting this or supporting that. I don't have anything I am emboldened to. I just call the market as I see it. Does that mean I'm right 100% of the time? God, no. Not anything far from it. I'd be making a lot more money than I do today if that was the case. But what I'm trying to do is teach the market what to look for, what's affecting them, why this happens, why that happens, why something in Russia matters to us here. So without further ado, compliance slide, my compliance department asked, we spent minutes and minutes and minutes going over this. Moving on. This slide hasn't changed. This is our base case acreage mix. And this is very, very close, if not the exact same as what it was when we were talking in person. This is the basis for all of the demand. Everything else you are about to see is built off of these numbers. Guys, I am here to tell you these numbers are not right. They will 100% change. It's probably not going to be right at 91 million acres of corn. It's not going to be 49 million and a half million acres of wheat. But this is what we're using today. We stay conservative on the buildup, and as we grow closer to the season, we start to build into the higher numbers. We're seeing a lot of big ones. University of Illinois out there actually threw an article talking about upwards of 96 million acres. A lot of people discounted and said, oh, there's no way. Guys, the market always has a way. It may be a very hard road to get there, but there's always a way. And if 2021 taught us anything, it's that. Never discount the chance. But this is what we're using today. So if you see things, it's like, oh, I saw this over here, that, and that doesn't make any sense. This very well may be the reason why. Other people use different numbers. There's nothing wrong with it. This is just our demand model. So urea, we went into this in depth when we talked in person. We talked about all the factors that got us from near record low urea prices to near record high prices. And again, without diving into it too much, is the derecho event and the COVID check. This was the pivot point. August 2020 was the pivot point because before this, grain prices were junk, fertilizer demand was near non-existent, and the market was acting like that. And all of a sudden, grain prices skyrocketed, COVID checks came out, and there was a massive influx of cash. Demand went from non-existent to phenomenal in a very, very short amount of time. And it was just problem after problem after problem after problem. Like I said, 2021 will go down as a series of black swan events. We will look back on this time and shake our head and say, how in the hell did that all happen? And guys, if we go back to July of 20, and I sit in front of you guys and I know exactly what's about to happen, and I read through all of this stuff that's going to happen, you would laugh at me and hang up and say, he's lost his freaking mind. Don't ever have him back. That was a waste of my time and a waste of my life. This is the market showing us there is always a way forward. There's always a way higher. There's always a way lower. So we set the high bar. It was actually, I have on here, this was Christmas because the presentation I was using the slide for, that's what we were talking about, was what happened since Christmas. The high dollar amount that urea traded in NOLA, New Orleans, Louisiana, again, we track that because that's the most liquid market out there. November 12th, 2021, a February shipping barge traded at $833 a ton. Since that point, this morning we hit the new recent low, $485. The price of a barge of urea has dropped since November 12th, $350 a ton. And it's not been a straight line down. Here's the crazy thing about it. Since we started back there, November 12th, we've had well over $500 of volatility. What I mean, if the price goes down 50 and up 50, that's $100 of volatility. This thing has been all over the place. January 5th stands out to me. The reason why, prices fell out of bed. We got the import totals for November. We're going to talk about that in a second. I was walking through Epcot with my wife down at Disney World. I didn't enjoy a single moment of that day because I was married to my phone, watching the market, seeing what's happening. Holy crap, it's falling. January 6th, It jumped back higher, went to 715. I'm walking around Magic Kingdom. We maybe spent a couple hours there, and then finally we just found a seat and spent about 5 hours and waited around for fireworks because I was tracking the market. And since then, it has been violent volatility. Guys, this is a battle playing out in front of our eyes between market bears and market bulls. And right now, the trend is lower. The bulls are winning. And I'm telling you, with conversations I'm having, some of these traders are not going to see anything other than a bear right now. When they look forward, they see no route out. Prices need to be down, and they need to continue down. And you don't get a word edge-in wise that they are going to be wrong or the prices can go back higher. And this is fertilizer. We're a bit of an immature market, and sometimes emotion wins the day. Fundamentals be damned, and that's what's playing out right now. There is nothing out there stopping the flow. This just gives you a sense of where prices are. This is starting to look an awful lot like 08. Guys, back when I was presenting the first time, I was saying we're not going to repeat this. We're going to get up here and we're going to hang. Could not have been more wrong. That did not age well. We have dropped down, and it's not only been NOLA. International is doing the exact same thing. Arab gold prices have fallen out of bed as well. Interested to see what happens tomorrow when we get the updated numbers. Whether or not we find a price point and this thing jumps back up when demand starts coming forward, that's the question we've got to be asking ourselves. So we talked about this. This looks at the NOLA price versus the delivered Arab gold price, because this tells a story. When we are a premium, like this green line is here, we were a premium to Arab gold replacement. That is us saying we need tons. And I'm going to show you why this was so stinking important. This was no more than 3 or 4 weeks, but this is insanely important. But since then, what have we done? A massive discount to the market. And as the international market has started to fall, we fall more. As the international market responds by going lower, we go that much lower. We are trying to stiff arm imports away from our marketplace. So we are actively telling the market, quit sending it here. We don't think that we need it. The problem is year-to-date imports, and this is looking at the July 1 through November 30. 2018, we would be at 1.4. 2019, we're about 1.4. 2020, last year, we're at 1.2. This July through November, we are already at 2.4 million tons of import. Why? October and November were both big. October was expected because we were this premium back in September, and it takes about 30 days to get a vessel over here. The import arm was calling for it. So we expected October to be big. But all of a sudden, October was a discount to the world. And the November import lineup was huge. We are well ahead of schedule. We have a glut of product that's sitting down there, up and down the river system, lower Mississippi. The market doesn't know what to do with it. It's scared to death. Again, this is the S&D. The 2 numbers I want you to look at. Number 1, this 5,687 number here in the yellow highlighted, the second number from the top. This is what we believe. Our StoneX numbers show us that we think we need 5.6, 5.7 million ton imported to meet our spring demand. Again, guys, this isn't right. I can guarantee you this isn't right. And I'm telling you this isn't right because there are so many things that can change. What if we have another Arctic blast that shuts down production and we need to bring more imports in? Look at how, we'll talk through some of these values here fairly soon. Look at how cheap urea is versus UAN and different things like that. Demand could skyrocket here fairly soon. But as of right now, 5.6, 5.7 is our target import goal, and we've already brought in 2.4 through November. You might be saying, well, shit, there's a lot of room to go. There's still 3 million ton. The problem is we can bring in a lot of stuff in a hurry. We can bring in well over 2 million ton in a 60-day period. If the world starts puking, it's looking for someplace to go. We can make up that 3 million ton in no time. We can beat this number very, very quickly. That's what everybody's scared of. The second number is just 335,000 down here in Indian inventory. This is what we believe will be left if we have the production right, the imports right, the beginning inventory, the demand, and all this other stuff. Again, guys, this isn't right. However, when we look at this number, what this is indicating, this is a directional number. This is saying our Indian inventories are going to be very low. If our imports are here and our production is here and all these other things play out, if there is a surge in urea demand, there's not a lot of excess sitting in the U.S. marketplace prepared for that demand. The market gets caught flat-footed, and all of a sudden it's an oh crap moment. We don't have enough to meet it. That usually means prices jump. This is just a graph. I like the way this looks. Glenn put this together for me. It looks at the U.S. production plus imports less exports. It's our net supply. And so you start to see very, very quickly, October, November, and probably December, we are going to be well above the last few years. This is why we're so freaking bearish. We've got too much stuff sitting around. But if our imports slow way down because we've been so discounted to the world and we don't see a massive surge come here, Look what happens in January. We start to get a little more normalized. In February, we're a little higher than last year. We're still okay. March and April, May, all of a sudden we're in oh crap moments again. We don't have enough. We need to start playing catch up. We may already do it, and we don't know yet. We don't know December. We don't know January or February. We've got to see where those numbers play out, but this is going to be very important. Imports, again, this is just to give you a sense of where this stuff comes from. This is one to digest later on when you've got time to look through it. But again, keep in mind, Arab Gulf is almost half of our net imports. They're a big, big partner of ours. Russia, why am I spending so much time talking about the Russia-Ukraine situation? 15% of my of the imports coming into the U.S. come from Russia. And I'll show you here in a second why they're even bigger of a deal. There's been a lot of world demand that's been very high. India's been high, Brazil's been high, US, we're planting 90 plus million acres year after year after year. But COVID delays, we had a lot of plant turnarounds that helped us get us to high prices. Europe continues to deal with a high energy crisis, and that's not getting any better. In fact, I'm less concerned we shut down Russia exports, and I am more concerned that Russia shuts off the natural gas pipeline to Europe. Because if that happens, they're extremely tight on product. All of a sudden, at that point, now the governments have to decide, do I give the natural gas to the residential to heat their homes and cook their food, or do I give it to the industrial complex? I know the answer. You know the answer. It is not going to fertilizer production. It's a worst case scenario. It's a low case scenario, but the ramifications are huge. But what if we did shut down Russia? What if there was an all-out war? And what if we parked warships outside of each one of their docks and said, if a ship leaves, a ship sinks? The world export total for urea last year was 52 million ton. Russia was 7 million ton of it. That is 14% of all global exports. If we shut them down, or they purposely shut down to make the world pay the price, we lose almost 15% of the global export. That is going to have an effect. And if you believe China starts doing the same thing to support their communist brother, same deal. We've lost another big one. That's another 5.5 million ton per year. What happens halfway around the world happens to us. It matters. Bullish factors, bearish factors. Again, like I had said during the presentation last time, we are I don't know where prices exactly are going, but I know things I can kind of watch and see what happens. I still see a tight global S&D through Q1. Prices certainly are not reflecting it, and demand is dragging its feet because that's what it does when prices start to go down. But we'll see if this plays out. The bigger one for me, anhydrous and UAN prices are hanging up, and urea in a lot of spots are anywhere from a 20 to a 30 cent per pound of actual end basis cheaper. Now, this is talking about the Gulf, and eventually these numbers are going to work their way through the system. But there's a lot of places that are already saying, gosh dang it, these kind of values. We always talk about switching between the products, and it never happens. 20 to 30 cents a pound cheaper, they absolutely will switch. I will lose a ton of upgrade UAN demand and anhydrous demand to urea. This could push a lot more demand to urea and surprise us. And then NOLA being a huge discount to the international market. Go back to our net supplies. If we get to the point where we need to start calling on more imports, we've got to get back in line with the international market. If the international market finds footing, we've got a little ways to go. Same thing, slide in the grain markets. Now, for you guys in Illinois, you grow corn. It's fantastic soil. You grow corn every single year. It's almost a sickness. There's a lot of acres out there, though, that are on the fringe. It's the northern plains, the southern plains. They don't have the dirt that you do. They don't have the yield capacity. They are dealing with very, very tight margins at where we're at today, especially with the high fertilizer prices. If we see the corn prices slide significantly, those acres have to switch to something else, and we will lose demand. This is a big one. This is one we've been talking about for a while, and it's very much playing out. Fertilizer is a bit of an immature market. Usually it trades off fundamentals, but there are times when emotion takes hold. And there's a lot of players out there. They do not want to hear any sort of bullish talk. They think that this thing is going to the floor, and it doesn't matter what people talk about. That is the way the market is. Emotional trading sometimes beat fundamental trading. We are living that. Then the international market. Listen, we're taking stabs, but we think demand is going to be. Demand or supply is going to be. We don't know. China could change its mind tomorrow on the exports or on not allowing it to happen. They could sit there and say, fine, go for it. What if we overstate the demand in India and Brazil and things like that? We're not always right. We got to watch it. If we've overstated that, all of a sudden this thing turns bearish even more. But the two biggest things we're watching going forward, I'm keeping a very close eye on China, because if they re-enter the export market, then that's a big deal. And the second thing is North America production. If we have a last-minute loss of production like we did last year with the Arctic blast, we lose a lot of tons right before season. We turn the narrative around, and all of a sudden we can see this thing pop back higher. UAN, since we went from almost record lows to record highs, it has been crickets. And a lot of people are saying, well, urea's fallen to the floor. Why isn't UAN doing the same thing? It is because the producer in the US does not have to. Right now, they feel they have time on their hands. And I am not going to say this trying to convince you that it's right. I don't even know that it's right. I don't know if I've convinced myself that it's right, but this is how they likely think about it. If you're a producer and you drop your price today, A, you're not going to sell anything else because the market's going to say, screw you. Okay, you dropped it 50. I want another $100. I want 150 bucks. I'm not going to buy it. I'm going to put you on the ropes. And you've dropped the market on its head without gaining anything. You've done nothing. But if you can drag your feet for a while, let's say you can drag your feet for a month. What if corn prices skyrocket because Ukraine gets shut down by Russia? What if there's another Arctic blast that shuts down the production? What if imports start to disappoint and we start to see our price skyrocket? All of a sudden, if you've already dropped your price today, you lose the chance at maybes. You can always drop your price tomorrow. Why lock in a lower price today if you can wait and do it tomorrow? At least give yourself an out. Like I said, I'm not trying to convince you it's the right thing, and I know it doesn't make you feel real good, but this is how we need to look at it from a producer's eyes, because that's how they are likely looking at it. And they see urea dropping, and they likely know that there's demand that's going to flow to it, but they're going to wait and see what happens here. They may drop it today. They may drop it tomorrow. I wouldn't be shocked. But it's more likely they're going to try to hold the price where it is because they like those margins. Again, since we've hit the all-time high, we've just gone flatlined. Not much happening there. Same factors that affected urea is the same thing that happened on UAN. We'll talk about the countervailing anti-dumping duty case in a second. Here's what I'm talking about on the spreads. This was as of last Thursday, it's 23 cents. It's wider now. This is probably closer to 25, 30 cents. It is a massive, UAN is a massive, massive premium right now. You may not be seeing it on from the retail side on the farm, but it is happening. It's starting to play out. If this continues, you're going to start seeing it on your side. This is going to change practices. Even people in Illinois, you guys barely use anything. I think back when I was at Coke, I think demand for urea was like 125 to 150 statewide, 1,000. It was nothing in the whole scheme of things. That could change very quickly, these differentials. As far as our balances, again, the only one I want you to really pay attention to is this 566. This is a directional number, and this indicates we will end the spring with less inventory than we have in years. We don't have a lot of extra sitting around. So if there's a last minute surge of demand, and these are the things that kind of keep me up at night, the stuff isn't sitting around just waiting for us to show up. If there is a Arctic blast, if there's a production hiccup, it is going to be felt very, very quickly in the marketplace. Again, just to give you a sense of where the product comes from, CF produces about half of it. The rest of them make up the other, the rest of the marketplace. So we're talking 5 companies control 93% of U.S. capacity. So the anti-dumping case against Russia and Trinidad, what do we think is going to happen there? Simple answer, I think the announcement, the duty rate when it's announced is going to be next to nothing. It is going to be a non-event. The countervailing duty case, which was already announced weeks and weeks ago, and Trinidad was set at like 1.8, and I think Russia was like 9.6. Those rates are nothing, and that was the stronger case. So I think when the anti-dumping comes out, I think it's just nothing. I think they just sit there and say, nope, there's nothing here. We can move on. As they'll have to pay a little bit of a duty, but it's not much of anything. But it's a government entity. Trust me, again, 21 taught us, be prepared for anything. Why did they target Russia, Trinidad? Well, because those two markets, those two countries represent 80% of the imports into the U.S. market. If you can shut them out, you now control the U.S. You now control the UAN market in North America. It's good business if you can get into it. I don't get upset with CF for calling for the duty. They can ask for whatever they want. It's up to the government to sit there and say yes or no. If they sit there and say yes and put a massive import duty on these two countries, I'm mad at the DOC. I am mad at these government entities. They are the one that caused it. They are the ones that said yes. World UAN capacity. Why did they call against Trinidad and Russia? Well, like we said, they control half of US and basically North America, they control half of it. Knock out Trinidad, knock out Russia. We know what's going on with Europe with all the natural gas and Russia and all this stuff. So they're not going to export anything. Very quickly, you find out there's nothing left around the world. North Africa and the rest of the world account for 500,000 ton export total. We run out of options. The world gets very, very tight very, very quickly. Urea is a huge market. UAN is a bit of a niche in the whole scheme of things. What does Russia mean to the picture? I'm still more worried about them shutting off the gas supplies to Europe and shutting down their production. But if we were to shut down Russia, they were 23% last year. They were 31% of it 2 years ago. They are a major, major, huge part of the global export. If we lose them, we lose upward a quarter to a third of the global export flow. So what are we looking at going forward here? Check my phone, see where we're at. Okay, we're gonna go a little quicker here. Bullishly, my biggest thing is this anti-dumping countervailing duty case. If this thing comes out with some double-digit numbers, all of a sudden that changes the whole outlook of the marketplace. But flip side, if urea continues to see price destruction, if anhydrous starts to follow, UAN is going to have to follow. It can only hold up on its own for so long. And then all these other factors you can read through, but again, these are the two that stand out to me. So going forward, I am watching that urea market like a hawk. Are we finding a price floor? Does it keep on falling? The same thing, production hiccup. If all of a sudden I start seeing some long-term forecasts and it talks about an arc blast going to hit Texas again, I'm all of a sudden changing my narrative to we're bullish very, very quickly. Ammonia, this is a big one. And since we got done with fall and we got these really, really big high prices, there's been nothing. It's been crickets. And it's from the supply side and the demand side. And like we talked about from a UAN, why drop your price today if you can wait till tomorrow? It is the same thing. And all these same factors, but the huge fall run is actually a bullish point. A lot of people think it's bearish, but it couldn't be further from the truth. So we revised our fall number from 2 million ton to 2.3. But in doing so, we actually revised our spring number from 2 million to 1.75. Our net total is only 4 million ton. That's right where we had it. Why? Because we don't think the supplies will be in place to get there. And right now, that's what the anhydrous market is showing. This compares the anhydrous price versus the urea price on the price per pound of actual N. When this price was way up here, we were sitting there telling people, you need to buy anhydrous. You need to do whatever you can to get it in place. You need to put it on the field. I was telling my dad, once that toolbar hits the ground, don't you turn off that tractor. I'll go run it at night if I need to, but get this stuff in the ground. Because anhydrous was begging for demand and starting to pull it away from urea. Well, now all of a sudden, the anhydrous price is a premium urea. It is screaming, push your demand to urea. Go somewhere else. We don't have enough supply. I didn't believe this until I worked from Coke, but I've seen it and I know it. There's not enough refrigeration at the plant. There's not enough truck, rail, barge, anything to move the product from point A to point B to where it needs to be by the time we start spring. We ran the fall nearly till Christmas. That means we have January, we have February, and we may get part of March to refill the system, and it cannot be done. If we start March 1, March 10, and we've seen that before in Illinois, haven't we? If we start that early and we run this system out, we are going hand to mouth on load to load to load, and it turns into eBay. It turns into a bid war to find tons. Now, UAN prices haven't fallen. So that is kind of back in range. UAN and anhydrous kind of like, yeah, we're cool. We'll stay together. We'll hang up here. If one or the other falls, now it becomes the high price and it's going to struggle to stay by itself. Going forward, again, I know this seems counterintuitive, but a huge fall application, if it reduces available inventories, which it did, actually means there's less to start the season going into spring. We're going to start playing from behind the eight ball. That does not mean we cannot catch up. It makes it very, very difficult though. Bearish side, urea is already collapsing. We're down 350 bucks a ton. The UAN is held up because producers don't have to drop it yet. And so UAN and anhydrous both kind of staring at each other like, I'm cool if you're cool. But if one or the other starts to fall, it's going to bring the other one with it, I think. So if we see UAN starting to go, I'm scared for anhydrous. Going forward, weather is still the #1 issue. I could come to you right now and say I can provide you free anhydrous. But if you cannot get that tractor in the field, if you cannot run that toolbar through the ground, and all of a sudden we get all the way halfway through April, just then it starts to open up, no longer matters. We've lost our season. Weather is always going to be the biggest driver of the anhydrous marketplace. We always have to remember that. All the S&Ds in the world mean nothing if you can't get out there and get it done. Phosphate. Since we hit the high of 745 bucks a ton, this has actually scaled back about $80 a ton. And it's interesting, and we'll talk about this here in a little bit, but versus the world is very, very high priced, and we've been falling. It doesn't make a whole lot of sense. But again, all the same factors. It's the countervailing duty case. We talked about that in person. Chinese exports have been on again, off again, but right now they're off again. And China's the biggest exporter. We'll show that in a second. The derecho and COVID checks, of course, help boost demand. Huge fall 20, spring 21 run. Inventory levels were empty. There just wasn't anything out. We ran them out of business. Now we've got grain prices still pretty good. Corn price has been gaining a little bit per day. That's helping out. And we're continuing to see tight inventories across the world. India and Pakistan are begging for tons. Australia's getting ready to go. The Northern Hemisphere has to get ready for spring. There still seems to be more demand than there is supply. And where are we today? We've seen our price go back. Now, we've gotten nowhere near where we were in 2008. We didn't want to get there. We don't need to get there. But just to give you a sense of where we are versus where we were. Where do our imports come from? Why are we so interested in the countervailing duty case? Why are we so interested in what goes on around the world? 2 years ago, Morocco was bringing 2 million tons a year in, and now they're nothing because of the countervailing duty case. 2 years ago, 3 years ago, I guess now. 3 years ago now, Russia was bringing 1.2 million. Now they're nothing because of the countervailing duty case. Saudi Arabia stepped up, Jordan stepped up. We've gotten tons from Australia. There's no freaking reason in the world we need to bring tons from Australia. They are halfway around the world. Tons from towns in Australia, the Northeast coast, should never come to here. But that's how messed up our supply chains were there for a little bit. And this gives you a sense of where all this product is produced around the world. These countries that are highlighted in yellow are the ones that have duties from the U.S. government. China already had one in place. Morocco and Russia had one placed on it by Mosaic here back in June 20. So go through what's left. U.S., well, that's a lot of Mosaic, right? India, take a look here. They don't export. Brazil, they don't export. The top 7 countries represent almost 90% of the world capacity and almost 90% of the world exports. And I skipped over Saudi Arabia, didn't I? I don't know if you caught that or not. Why did I skip over it? They have not been part of the duty rate, and they're able to go here free. Why? Well, Mosaic owns a good chunk of them, and they don't want to put duties against something they have ownership in. And so they're allowed to come here free. That's why they become one of our bigger importers. This is why you're seeing so much uproar from government officials and grain associations and things like that. They're saying this is crap. You've given Mosaic a monopoly. This is not fair. What happens with all that, I don't know, but this right here is interesting. Now, why did that happen? We used to be a net exporter, a huge exporter of phosphate from the U.S., and it went all around the world. But over the years, they ran out of good quality phosphate rock reserves, and they're not allowed to expand their mines. They're continuing to keep it as, they're keeping them in the confines of what they have. Because Florida doesn't care as much about phosphate mining. They care more about tourism dollars, whether that's people going to the beach, people going to watch rockets take off, or if it's people going to Mickey Mouse and things like that. Florida is ran on tourism, and phosphate production does not have a place in that, especially when you see these dams break on the gypsum stacks. It's an environmental thing, and Florida is a very environmental state. So we've slowly started to see all of a sudden imports pick up. Morocco has become a big producer. Russia, of course, China. Mosaic was losing their footing. They were becoming one of the high-cost producers in the world. So they got to the point where here a couple of years ago, they had to ask for help. Give us a countervailing duty case so we can continue to be operational. I'm not mad at Mosaic for doing it. I'm mad at the government for giving it to them. You can ask for whatever you want, but you can be told no, that they did not do that. So what's going on? Why is the world so high priced? We continue to see India buying stuff $920, $930, $920, $930 delivered, and we've been dropping. We're $665 on DAP. Why? Right now, we should be able to take 665 short ton USD. We should be able to ship it to India, and we should be able to beat every producer that has been sending product at that price level. We can be competitive. We're not exactly operating as the free market. We are all of a sudden a discount to the rest of the world again. Now, why is this happening with the countervailing duty case? It's because of the spotlight. Again, the grain associations are attacking Mosaic. Politicians are starting to attack Mosaic. Farmers are attacking Mosaic, saying this is crap, the price is so stupidly high. Well, now all of a sudden, all of that racket has scared everybody to death. Nobody in the marketplace wants to be tied to an export. Nobody wants to buy up barges or take a vessel from Mosaic and ship it externally. They don't want to export it, because if you make a bunch of money, good for you, but you better save a bunch of it for lawyers to sit with you when you have to start answering panel questions. We have almost turned into a bit of a kind of like China, where we shut off exports. Nobody has told us we had to do it, but because of the unwanted attention in the fertilizer marketplace, traders are now like, screw it, I could make a lot of money. I could probably set my year. I am not dealing with that heat. I don't want it. I don't need it. We will just continue to work this way. The uproar has worked. Russia, what does this mean? they're 10, 11% of the world marketplace as far as exports. We shut them down, it's a big, big deal. And again, going forward, as long as China remains out of the export game, and they're continuing to say June 22, whether it stays that long or not, I don't know. But as long as they stay out, we have lost our biggest producer in the world, our biggest exporter. But the flip side, if they turn a 180 and they start exporting heavily tomorrow, I won't blink an eye. China does it. China can do it. It's what happens when you're run by the government. So that is the number one thing I am watching. China, to my point, continues to ebb and flow this marketplace for the short term. And then potash, we'll wrap it up with this one. We hit the 690 peak, and you guessed it, it has been crickets ever since. Prices are pretty much mundane. Same thing. There's just not a whole lot going on out there. You know, all the same things. We lost some production up in Esterhazy. That was 1 million ton that we lost. We're not only watching the Russia-Ukraine situation, we're also watching Belarus. And from an import standpoint, well, Russia and Belarus, they're not a big percent, right? I mean, fiscal year 20 or fertilizer year 20, they were 7% total. Last fertilizer year, they were 11%. That's not enormous. So why do we worry about it so much? Well, because of the total world potash capacity, those two nations equate to about 33% of it. If we cut off these two nations from the rest of the world and we don't let them send anything outward, we lose a very, very big chunk of it. Now, can Canada make up the difference of it? China's a net importer still. Can the rest of the world step up? Maybe. But it's very difficult to lose 33% of your world operating capacity and not have it affect prices. This is why that region is so important to us right now. So going forward, we're going to continue to watch Russia-Ukraine. Guys, I think it's a very low probability that we get to the point where we're shutting down their exports. I don't think it's going to happen, but we need to watch it because it's a huge ramification if it does. Same thing, Belarus. If they don't calm the hell down and stop getting sanctions against them, they're going to continue to get more sanctions, and they're going to get to where they are completely shut down. We lose a big producer. But we also need to be cognizant of demand destruction. Back in 08, back when we were dealing with similar type situations, demand was down 40% from normal, and a lot of it was due to demand destruction. Some of it is acre loss, but a lot of it was the demand destruction. If we see that again this year, that is going to scare the crap out of this marketplace. So we need to watch Russia very closely, and we need to watch Belarus. I hate it from, I hate to put our eggs in that basket, but right now, these two are the biggest things that we need to watch. So sorry to go through this stuff so quick. I know it's a lot of stuff in a very short amount of time. Like I said, I'll make sure I get these slides over and get them out to you guys. But if you got questions or anything, I'm happy to stick around and answer them, or we can always do them afterwards, whatever you think's best.